What's going on, guys? Real Trader Joe here, bringing you guys another live broadcast from my market recap. And so I can't really call it live because, the market's closed, but live in that I'm sitting here talking to you and not recording this ahead of time. So apologies for any of the mouse noises. I got to get a new mouse. This one just kind of intermittently disconnects, and we were off there to the races with a musical tune from the Willy Wonka Windows maker people who made the audio cues for that mouse. So off we go. NASDAQ up 36.75 with the Dow, and mini S&P is pretty much flat on the day. ES up 6 points after hours, and what a day to be neutral, man. I mean, you can kind of see here, I'm all smiles across the board. We are digging ourselves out of our deep hole here in Micron. Deep being relative, of course, to the Coinbase losses that I've gone about ad nauseum on the channel so far, but we got the 65.5, 72.5 inverted strangle, and this guy rallied right in to the strangle itself, face punch right up about $4, and I could not be happier with that up move. AMD kind of in a similar situation. We were a little tender on the downside here, and with this 115 straddle, 32 days to go, looking good. Looking real good. We're up about 441, and another couple days like that with some IVR drop, and we'll be ready to get out of this guy with 25% profit. But of course, we don't want it to go too far. At 115 we're actually short, so I wouldn't mind if the market kind of just fought itself here a little bit, and we had a little bit of a civil war going on between the bulls and the bears. I'm kind of the arms dealer in this whole thing. I kind of just hope the bulls and bears exhaust each other, and then I'm stuck here on the sidelines. Interesting note, portfolio-wise, I am at about 1 beta-weighted delta. That's right, folks. We got 1 positive single beta-weighted delta, and man, today was just phenomenal. AAP is going to be a bit of a risky one. We do have earnings in 8 days. I decided to go ahead and just sell a 65 put. 257 credit collected, and IVR at 111. I think I sold this at around 108, so IVR went up even further today, but it's got to go down at some point. I mean, this thing's either going to sell off and we're going to have to deal with that, or it'll rally and we're going to make bank. Kind of a feast or famine trade at this point. If IVR is this high, it could be due to earnings, but I mean, the last time we had a drop that precipitous, it was at like 112, went to 79, and IVR then was at like 93, so the market is really afraid of what is going to happen to this stock, and we're going to capitalize on that with a short put. I don't usually do many short puts. I pretty much only do exclusively short strangles, since I just think it's better just to capitalize on both sides of the market for buying power efficiency. It's a personal preference of mine. You can totally do short puts, but I just thought it would be nice to get some bias in here, because what happens when you have these short strangles on is that they all kind of run together. I mean, you can kind of see AMD and Micron sort of in a similar spot, so if I'm bullish on one, I'm going to be bullish on the other because they move in sympathy, and that's the case here. We made a number of adjustments. I will say that despite the tight strategies here, partially that's due to a number of adjustments that we made on this trade. We got 3 rolls in AMD. If we just pop open that order chain, this is a good argument for doing things the Dr. Jim Schultz way, which is to do nothing. If we had actually done nothing and left this 100, 120 strangle the way it was, we would be profitable by quite a margin on this position. But instead, I just preferred to neutralize the deltas. We put this trade on August 2nd, so it's kind of making me do some rethinking. We put this trade on right about down here, and then we had this massive upward move, and I kind of had flashbacks to this back here. I said, oh geez, like what happens if we just get this massive face punch semiconductor thing? So my adjustments might have been a little bit fear-based, but all's not lost. I mean, we are sitting on 1180 in collected credits, which is about the worth of the straddle at the moment. So worst case scenario right now is that we're transposing into a straddle that is essentially at market price. So no harm done, but definitely something to consider in terms of adjusting for bullishness, particularly because we've had this Micron inverted strangle on for quite a while now. We take a look at that guy, and we put him on last month. July 6th, and Micron has just been an absolute bowl of a ride, dude. I mean, look at this. It bucked all the way up and then went all the way back down. I think we put the trade on right here. Yeah, 708, 707. So we were short the 65 and we just got ran over. So we inverted up here and now it's all the way back down to 64 and now all the way back up to 68. So we're just trying to hang on. I say all that to say that, you know, these coordinated positions have me a little worried. I don't know that I want to be super bullish in the semiconductor stocks, but today, man, it paid 115, 132, definitely a sizable chunk of profit in the semiconductor space, and that liftoff is really helping us out. I will take a quote from Winston Churchill's book here, though. Wars are not won by evacuations. We have a long way to go before either of these positions really see the light. So, happy, but you know, I would have preferred to get more of my guys out of Dunkirk, if you know what I mean. AAP, we already talked about. Spotify this is kind of an interesting one. So I typically would be inclined to kind of have more short delta here. I don't know that I like hanging out at 22 long delta when we're already tested on our short strike, but here's the thing, guys. We have collected 979 on this order chain. We have a ton of credits to work with. We're just on the verge of our short strike, and I could see a world where Spotify rallies somewhere in the neighborhood of $4, and we can kind of get some profitability on this position. If we just, one of the things I like to do when I come in here and trade all this stuff is to just start messing around with the calendar and seeing like how profitable I'm gonna be in a couple of days. We don't have to wait that long before we start seeing some real results here on the position, particularly because this thing thinks we've collected $7 and we've collected way more than that. So we are actually probably above the 56% profit that it's pricing us in at. Looks like it's taken our break-even points. The platform is saying our break-even points are at 132 and change. That's actually not true. We're actually at almost $10, so we're just shy of the 130 in terms of our break even. So I'm feeling good about our profitability on the trade, and I don't really feel too inclined to adjust that 150 just yet. Again, though, moral of the story, at one point we had the 130, 140 trade on for 510, and then rolled that 130 put all the way up to the 140 strike. Excuse me, I messed that up. So we had the 130, rolled it all the way to the 140, and then opened the 155. So we had, at some point, a 130, 155 strangle that we then just adjusted a ton to get to where we are now. The 130, 155 would be looking mighty fine right now also. So, case in point, I guess I'm kind of seeing an argument for leaving things as they are and going into marketplace cyclicality. Of course, this is all hindsight. Knowing what I know now, you know, I would still prefer, I think, to adjust for the deltas and give myself some leeway in the portfolio exposure. New trades, though, strangles in X and Upstart. Volatility is kind of on the lower end here. We're back down to about 14.8. So these are some high-ish volatility underlyings. Excuse me. I'm not too excited about 25 IVR or 35 IVR. Those are both workable, but some big moves in both of these underlyings recently. And, I mean, I don't know what's wrong with me. Maybe this is just a bad idea, you know. U.S. steel company up $8, and here I am selling a strangle, basically hoping that I don't catch the falling knife. But for the buying power reduction, you know, $458, $30 stock, I'll take the $1.48 for sure. And Upstart, although it has been a brutal stock in the past, I'm kind of confident maybe all the selling has gone away. Of course, you don't know for sure, but I can always adjust. And again, it's a $30 stock. Even Coinbase, whom we are still really losing to, was at one point like a $50 stock. And for the stock price and its volatility, this amount seems appropriate. So I say all that to say I'm not really that worried about Upstart doing anything crazy. Coinbase, by the way, we should address I was essentially delta neutral on the position, and I made yet another roll. So I actually kicked this 90 put out in time, gave myself a little more time with the October monthly cycle, and then I rolled down to the 85. So I still received a credit for that roll, and I'll show you that here in the order chain. Received about a 43-cent credit, but now I have tightened the inverted strangle to a 15-point wide inverted strangle and collected 1667 on the total position. So now it is possible for me to make a $1 and change profit, $1.67, if Coinbase ends up anywhere in here at expiration. So yippee, we're finally out of losing territory no matter what. We have a strangle on. I don't, it's not ideal, 15 points, but I mean, look here, we've come a long way. We were down $3,000 on this position at one point, and now we're down to 1740. I decided to keep this bearish bias because of the low IVR in this underlying. You can kind of see that all the fear has been bled out of Coinbase over the last couple of weeks, and last 1 month, rather, I guess I should say. Annalisa Torres made her ruling on the 13th of July, and it's been about 30 days since that's happened. The market's kind of settled down, and I want that bearish bias in case we get more fear, higher IVR increase, bad for our short options. At this point, it's pretty much a lead position. If we closed this out, we would get back about 4K in buying power, so that's worth a consideration. I mean, I think at some point I would be happy just kind of closing this for like a $600 loss, but I don't know. I mean, if we were willing to stew in the filth at 3K, we gotta stay here at 1740 and see what happens, right? So, not optimistic with this low IVR, but we've held on this long. We've managed to defend the trade. The trade is in a decent position as far as maintaining this loser goes. Obviously, not happy with the overall profitability on the trade, but still lots to consider here as we continue to navigate this loser. Biggest loser of my trading career, certainly, and one I'll be taking a lot of lessons from. I think that's it. I think we covered everything. Other than that, just sort of watching the market dynamics. There's, big talk about whether the Fed's going to raise interest rates or not. I'm just kind of keeping the Fed meetings on my calendar and looking to see what happens with the rest of the year. I think at some point I'm going to join the bulls if all this stuff doesn't shake out. But historically, September, October, November, not too bullish for the stock market. Usually the June swoon and July swoon kind of bring the market up to speed. So I'd expect that we've seen a good deal of rallying. Not surprised at all to see this cool off on the NASDAQ here. If we go to it in Q, here we go. Yeah, we can kind of see it taper off toward the end of July, beginning of August. I think that's totally normal. And I wouldn't be shocked to see this continue to fall down. So concerns for the future. Bullish concentrations in semiconductors. I am looking to get rid of these positions when I can. In fact, I debated closing this today just to establish a new position, just so that I'd have some protection. I mean, it was kind of worth my thinking, but then I said, well, you did all this rolling, and you might as well just hold on to it. We'll see if that proves to be a mistake, but that is one concern of mine. And one of the things I like to do is go to the watch list tab and actually look at my positions. It has the correlation of the SPY here, so you can see we've got some weaker correlated underlyings in Spotify, Coinbase, AAP, and then we have some stronger correlated underlyings in the semiconductors, Upstart, and steel. Steel being the most strongly correlated. But even these correlations really, I mean, they're on the strong-ish side, but they're not that strong. They're not 70 100s or 80 100s. Or 60 100s even, for that matter. So even my strongly correlated underlyings are moderate correlations. So for that reason, not too worried. Spotify and Coinbase probably going to move independently of the SPY. AAP probably going to move independently of the SPY. XOP, I've noticed, even though it's not negatively correlated, it does tend to spite me on the down days. It does tend to be that one underlying that is shooting me in the head by increasing. Still short on XOP, by the way, but we're in a better spot. This this dollar down move is something I really needed. We have the 143, 149, and we have a $10 inversion here, so much better than Coinbase. Able to make a $4 profit on the position. Not bad, not bad at all. I will be probably rolling this out if I just kind of tinker with the strikes here. This seems okay. If we just bring that to a straddle, that's a fan favorite of mine, is uninverting and collecting some more credit. One thing I've really been trying to measure is the delta to theta trade-off, right? So I'm losing 3.5 theta here almost, but I only get 4 additional short delta. I pick up some credits, but that theta loss doesn't really seem worth it to me yet. And if you look at the expiration, that's why. We're outside of the 45-day expiration curve. So that's something I've been trying to do recently, and I think it's working out pretty well. I'm back up into the profit zone that I was before all this Coinbase business happened, and it's looking good. I think I'm well into the 10% profit on my portfolio range now, and hoping to close out the year with about 15%. I think if things go well. If things go really well, I could probably get 20%, but that's if I hit home runs on everything, and Elon Musk sends people to Mars, and I don't miss my next Dungeons and Dragons campaign, and that sort of thing. So looking real good, and I'm really happy with how today went. If you guys have any questions, let me know. I am not monitoring the chat right now, although I probably should be, and I'll make sure to do that for next time. But thanks for watching, guys, and I hope to see you again here soon. Peace.